What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about one stock that is now shaping up to be a very nice potential swing trading opportunity. And this is also a company that could potentially be a very nice long-term potential investment as well, because it's got literally no debt. So it's got a fantastic balance sheet with very nice consistent growth, and the earnings are also forecasted to continue to increase in terms of that growth rate. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. And of course, you get access to all the buy and sell alerts, options alerts, trade ideas, members only videos. Everything is going to be included, as well as a lot of educational content and material as well. So again, 16% annual discount available with the link down below. So company that we are talking about today is going to be Intuitive Surgical, ISRG, and it has been selling off quite a bit from its recent highs of well over $360, down about 20%, now sitting just above its 200 simple moving average. And of course, the all-time high sits from December 21 at just over $375. Obviously, we did almost get up to that level before seeing a bit of a pullback after the earnings came out. That's when the sell-off really started, and they did beat on both EPS and revenue. So they do provide robot-assisted surgical equipment and solution and invasive care. So they are in the health technology sector, and the revenue and the earnings and everything has absolutely been beautifully grown from 2013 to 2.2 billion to over $6.2 billion, and gross profits gone from 1.6 billion to 4.2 billion dollars, with operating income $852 million to over $1.6 billion. So that's more than doubled in the last about 10 years. Net income's gone from $671 million to $1.3 billion. Again, more than doubled. And we've got the share count pretty much stagnant. In fact, it's gone down since 2013, but not by a whole lot, but it has consistently gone down, with EBITDA also moving in the right direction. Very significant margins, 66% gross margins, with net income margins sitting at just over 21%. And we got return on common equity, capital, and assets pretty decent at just over 8 to 10%. Now, one thing I do want to mention is, and one of the metrics that we are going to starting to focus now more and more in terms of efficiency, is net income per employee. So this right here is a very, very nice sort of efficiency metric that we are also going to be analyzing moving forward. Net income per employee basically means how much profit are they generating per employee. That's $117,000, right? If you compare this to the 5-year average, it's at $170,000. So that has come down over time. And what that means is that the company is becoming less efficient, right? So that's something to keep in mind, because Intuitive Surgical, we want the margins and everything to grow. And you can also see the net margins have come down. So 5-year average is 26%. Right now we're sitting at 21%. Gross profit margins are also lower, from 68 down to 66. And operating margins are also, it's not labeled here, but EBITDA margins are down from 34 to 30%. So efficiency is going to be under the microscopic overview here, because it is not looking great. It is definitely showing signs of reversing a little bit, but nonetheless, very nice consistent revenue growth, profitability growth, margins are strong. Valuation, however, is a little too expensive at over 55, 56 times non-GAAP earnings multiple, and of course price to sales trading at a little bit over 14, 15 times. We got price to cash flow at 41 to 54, and enterprise value to EBITDA trading at 33 to 46. So we are certainly at a very expensive valuation right now for Intuitive Surgical. Balance sheet A+, absolutely fantastic, $5.8 billion worth of cash with literally zero debt. I'm not sure if that's actually accurate. Let me just go back and check on a trading view as well to see if that's actually accurate. So it does say the company's got literally no debt, zero debt, with negative net debt of $5.8 billion. So that is absolutely phenomenal. And free cash flow growth on an annual basis has been pretty strong at over $1.1 billion, $1.1 billion in free cash flow every single year. So very strong balance sheet with fantastic current and quick ratio and very little debt to free cash flow. Earnings expectation are from 558 to over 1146. That actually is not supposed to be here. That's a Saturn at opposition. It's a Dubai astronomy. Like, you don't have to worry about that. I'm gonna go visit that later this weekend. But anyway, so going over to 2023 EPS of 558, we got 2028 1146. That's going to be a 15.5% growth rate for the company over the next 5 years. So that is going to be that growth rate for Intuitive Surgical. And if we plug in some of these numbers to better understand where that intrinsic value is, even though this is mostly going to be a swing trading idea that I'm going to go over in some of the technicals and some of the risk management stuff, but it's also, like I said, a potential long-term opportunity. That's exactly why I'm analyzing it from both a technical swing trading perspective and long-term fundamental analysis as well. So if you do with, let's say, 15% growth rate here, let's just go with about 25 times P multiple just for the sake of this video, because it's got very high margins. It's a software slash high margin business. Discount rate is going to be 12%, 10% margin of safety, and about negative 0.10 basically, so negative 0.1%, or let's just do 1% here. So we are looking at a fair value of $144, and right now the price is at $289. So definitely, a little too high, needs a 50% potential downside, obviously, from its valuation standpoint. If you go with, let's say, a 20 times P multiple, obviously it's going to be even lower at 115, which means a 60% potential downside needed in order for this to be a fair value company, stock, and of course from a long-term perspective as well, because the growth rate is not really that high to be justifying a 50 times P multiple. Let me tell you that 50 times multiple is way too high. But that being said, now switching over to the technical analysis and the potential swing trading opportunity, because that's the title of this video, one potential swing trading idea. So we are coming down to that 200 simple moving average. You've got the RSI and the MACD incredibly oversold, and you can see that we are just sitting right above that 200 SMA. So if I basically create a trade idea at those prices, so if we basically have an entry at around, let's say, 289, 288, 286, and we've got a support sitting right under that 200 simple moving average, that's going to be a risk of under 4%, right? That's going to be a stop loss right underneath $280. So the moment it breaks below 280, we're out. We're going to cut our losses because we know the fundamental valuation is way too high. So I wouldn't want to own ISRG long-term at these prices because my fair value is obviously a lot lower. So long-term at 289, no thanks. I don't want to pay 50, 55 times earnings. This is only a swing trading opportunity at this entry with a stop loss under 280 because of an oversold RSI, because of an oversold MACD, because of the fact that it's sold off over 20%, and a rally back up to that 50 SMA represents about a 9% upside. That's going to be a target up to 315. Right? So you've got a risk of about 3.7% with a target up to almost 10% upside. Does give us a pretty solid 2.5, 3-to-1 risk reward profile here for Intuitive Surgical. Not to mention on the weekly time frame, we are sitting right on that 50 simple moving average. So if I remove everything, again, you can see that we are sitting right above that 50 simple moving average after seeing 4 and 5 consecutive weeks of red for Intuitive Surgical. So that's exactly why I do like this idea, considering that it is oversold, it is trading at those moving averages, it is at a pretty good support here, because this right here, previous resistance, previous support for Intuitive Surgical. So we are sitting at a confluence of support, sitting at pretty good moving averages. We got oversold levels. So, it does make sense for a potential reversal trade idea at these levels. Let me know what you think about this. If you like this, let me know in the comment section down below. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board. And as always, happy investing, and I'll see you all in the next video.